yeah, Bitcoin is going to get to $1 million. There's no question in my mind. The question is, how much does that $1 million buy you?
Yeah.
And thinking in terms of US dollars again, like, what is that worth?
As James Lavish explores to understand Bitcoin's potential, we need to start by looking at the broader picture of the investable asset market. This market includes bonds, stocks, real estate, gold, art, and collectibles. Currently, bonds make up around $130 trillion, stocks around $120 trillion, and real estate is estimated to be between $300 to $500 trillion, depending on how you measure it. These are enormous figures, and they represent the bulk of where people's money is invested today. Bitcoin, on the other hand, is just a tiny speck in this vast sea of assets. Compared to these multi-trillion-dollar markets, Bitcoin's market capitalization is relatively minuscule. However, the question that James Lavish raises is whether this tiny speck has the potential to grow and eat into these other asset classes, similar to how Pac-Man gobbles up dots on the screen. The idea here is that as Bitcoin gains acceptance and becomes a more established asset, it could start to draw investment away from traditional asset classes. The real question is, which assets will Bitcoin affect the most? Will it be commercial real estate, residential real estate, or perhaps even stocks and bonds? As more investors begin to see Bitcoin as a viable alternative to traditional investments, they may start reallocating a portion of their portfolios to include it. This shift could be driven by a variety of factors, including concerns about inflation, distrust in the traditional financial system, or simply the desire to diversify into a new and potentially high-growth asset class.
How much percentage of Bitcoin does it become of the overall investable asset class? So, you've got bonds, 130 trillion, you've got stocks, 120 trillion, you've got real estate, 300 to 500 trillion, depending on, what you believe, which statista or whatever.
Yeah.
There are a lot of different measures there, whether they actually have mortgages included in that or if they've been pulled out. It's really confusing, but let's just say it's $300 trillion. You've got art and collectibles, you've got gold, and then you've got this little speck.
Yeah.
Does that speck grow and eat? Does it go Pac-Man and eat some of those other asset classes? And which ones does it eat? Does it eat the commercial real estate, residential real estate? Where does it start dipping into for people's portfolios to say, I'm going to reallocate some of this into that? So that's one piece, right? And then the second piece is, how much inflation is there? Are we talking about nominal dollars today? Are we talking about, are we taking that future value of money and just speaking in terms of that? Because I believe that, yeah, Bitcoin is going to get to $1 million. There's no question in my mind. The question is, how much does that $1 million buy you?
Yeah.
And thinking in terms of US dollars again, like, what is that worth? Is it worth a house in Dallas? Is it worth a car?
Yeah.
Like where is it worth a beer?
Yeah.
Like literally, like that's the we've all seen the Zimbabwe dollar where they was it $100 billion bill or something like that?
Yeah.
It's ridiculous. So will that happen? I can't say it won't. Eventually it will, unless we get off this path. And that goes back to, we have a major structural debt problem in the world, and the US is much worse than people realize because of our unfunded liabilities. And we've talked about this before. And so that's it's this looming problem. When does that, what happens that we have to face that problem?
One of the underlying issues that Lavish highlights is the structural debt problem, particularly in the United States. The U.S. faces a severe and growing debt crisis, exacerbated by unfunded liabilities, such as Social Security and Medicare. This problem is much worse than most people realize, and at some point, the world will have to face it. As governments continue to print money to meet their obligations, they dilute the value of existing currency. This creates a situation where the inflation rate far exceeds the official Consumer Price Index (CPI), leading to a loss of purchasing power for everyday people. Lavish points out that while the CPI might suggest inflation is at 3%, the expansion of the money supply could be more than double that, at 7% or more. This discrepancy is why many people feel that their cost of living is rising much faster than official inflation figures suggest.
At some point, the world realizes that we're just printing money in order to create more of it to make sure that we can still operate, and we're diluting everybody's dollars they already have. And people wake up to that and think, wait a minute, these bonds are not paying me enough to make up for that inflation. They're lying. They're absolutely lying. Oh, CPI is 3%. Okay, great. The expansion of the money supply is 7.1%.
Yeah.
Oh, wait a minute. So maybe that's why my grocery is a little bit more expensive than just 3% from last year.
Yeah.
I mean, it's not rocket science. If there's more money out there, there's more money chasing the same. The only thing is, do we have more products and services? We could have something of an AI miracle in productivity, which I expect we will have greater productivity because of AI. I think that, I believe that institutional adoption is a positive.
Okay.
And the most Bitcoiners that I talk to are like, we don't need them, but you do. What people don't realize is that there's the bulk of people's capital, their investments are tied up in institutional products. So whether it's IRAs, 401ks, pension plans, sometimes in real estate, you're tied up in these things that they're institutionally managed. And so institutions aren't just managing money for themselves. Hedge funds, some of them are, but even hedge funds have money from other people. And so, yes, you have family offices that are worth billions of dollars, and you have billionaires. But there's not that much. I think I quoted a stat the other day. I think it was 71 trillion. It's 71 billionaires in the U.S. and between all of them, they only have $5 trillion. So having institutions understanding adopt Bitcoin will really rapidly solidify it as that true store of value that can then compete with gold in an everyday, standard. And you can go around the world and actually, you can actually buy things with it, and create commerce with it. Whereas right now we're just not there yet.
As we look ahead, the future of Bitcoin is filled with both challenges and opportunities. On the one hand, it has the potential to disrupt traditional asset classes, offer a hedge against inflation, and become a cornerstone of the global financial system. On the other hand, it faces significant hurdles, including the need for widespread institutional adoption and the challenge of navigating a world of increasing inflation and structural debt problems. Lavish's insights provide a roadmap for understanding where Bitcoin might be headed and the factors that will influence its journey. As investors, it's crucial to stay informed and consider how these dynamics might affect our portfolios and financial strategies in the years to come. Thanks for watching. If you enjoyed this video, don't forget to like, share, and subscribe, and leave your questions and comments below. I'd love to hear from you. See you in the next video.